Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this, not so nice Friday afternoon. I hope you all had a great trading week so far. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend is, if you haven't done so, go check out the Elliott Wave Principle, which you can read online for free when you use the link in the description down below. That said, obviously, don't forget like, subscribe, and enable notifications so you don't miss out on future episodes. And with that, we can actually jump into my portfolio, and we'll see we have another slightly break-even start into the day with a green touch this time. Positions in the portfolio didn't change, so still biggest exposure GameStop, although pretty much no matter how it goes, I'm fine with it. With further positions in COS, Neo, Immersion, Barnes & Noble Education, Grab, and Novavax. But our biggest position is in GameStop, as it's been for quite some time, which is also the reason why we start with looking at GameStop. So far it's moving the way we expected. The only unexpected move was this bigger upward move that turns this entire pattern as set in the leading diagonal. We believe that wave A of our correction finished, and potentially wave B could have finished here, but could also get another push further up above 30.11 to 32.36. And if that were to happen, after that we should go down. Otherwise, we are going to be proven wrong here, which is always possible, but I don't expect it. So the other option is that wave B already finished here, in which case we would now get another 5 waves down, ideally to the 61.8 retracement here, or at least actually the 50% retracement, although we almost touched 50% already here. So we'll have to get a couple more candles on the chart, so it's going to take into next week before we can start to try to estimate the target area for wave C. But I wouldn't be surprised if the wave C move also just reaches the 50% retracement. For my positions, it would make more sense. It would be better if we reach the 61.8. Overall, still long-term bullish on GameStop. So just in the in the more short-term future, I would expect it to get a little bit further down. Moving on, before we look into other positions, we actually can look at Frontline. I published a short before the earnings pointing out that I expect it to retrace at least to the 38.2 retracement, potentially to the 50% retracement. As we can see, we haven't fully touched the 50% retracement yet, but we can also see that it would mark the potential bottom of what I believe to be wave 4 of the previous impulse wave of a lower degree. We would need to, so it's not, this is something that just doesn't fit into a short anymore, because it would just take too long, because we would need to dig deeper. First of all, we have to consider in Frontline, we don't hold a horse in the race, so we cannot really lose anything if I'm wrong, but still. I obviously called the drop with the earnings quite well, because I published the short an hour before the earnings, and after that happened. If we look at it, it looks like we have a big wave 1, 2. So we can see a clear 3-wave move here, down, up, down. That's some form of 1, 2, 3, 4, 5. So we don't concern ourselves with this bigger pattern for now. But then after that, we have basically 1, 2, 3, 4, 5. A corrective wave that's hard to label as 3 waves, but it has to be. And following that, we can add an expansion, and we see that we nicely terminated the 2618 extension level, which is our usual level for wave 3 target. Sometimes we don't go that far and turn around at the 1618 or the 2382, or sometimes we exceed it and reach then the 3618, for example. Now, with that in mind, also using Kennedy channeling technique, if that's our wave 1 and point 2, we have our base channel, and the breakout here confirms that we are using Kennedy channeling technique now in the 3rd wave. For the 3rd wave, we can then take point 1 and whatever high point we have. So if we would still be in the past, we would use this high point with a parallel through point 2, and if we would get a breakout to the bottom, we would assume that we're now in wave 4. That does not happen here, so we move on until when we get the next high and so on, until we actually reach this point where with a parallel through point 2, we finally have our breakout to the bottom, which means Kennedy channeling technique would suggest that we are now going, or that we're now in wave 4. If we are in wave 4, we can use a trend line. It's going to be a little bit tricky to put that one here, but it would look something like, yeah, potentially like this, which is our deceleration trend line. So we would work, or we would wait for, or need a breakout to the bottom of this to be confirmed at wave 5. Now the question is, how far down does it go here? First of all, we are now retracing this entire move, which means we have our usual retracement levels of 38.2, which we already broke, 50%, 61.8. So actually, in terms of likelihood, 38.2, 61.8, 50, 78.6, 21.4. Yeah? We have to consider the rule of alternation. So if wave 2 is a very complex corrective pattern, wave 4 will be an easy one. If wave 2 is an easy one, wave 4 will be a complex one. If wave 2 retraces 61.8%, then wave 4 retraces 38.2%. Not always, but often enough. In this case, wave 2 retraces almost 78.6%, so the alternation in terms of level doesn't really apply. But what else do we have that could help us determine if we already reached the bottom? First of all, very often wave 4 will touch the top or the median of the base channel. We can see the median would actually be at the 61.8% retracement level. Second of all, wave 4 very often, or the corrective wave will often retrace into the area of wave 4 of the previous impulse wave of a lower degree. So if we label this in some form, likely this here is wave 3, 4, and 5, which means the area of wave 4 is this area here, as I mentioned in the short about the frontline earnings. And the low point here would pretty much overlap, so it's 13.32 with the 50% retracement, which means it stands to reason that theoretically this is A, B, and C, although we already exceed even the 161.8 expansion level for this target area. So personally, I would consider potential small entries now, and also on the 50% retracement, but I wouldn't overcommit yet because we exceeded this target area here, which brings the second option, and that is that the correction is actually bigger, and this here is only wave 1, wave 2, wave 3 would then, we would expect for wave 3 to reach the 261.8 level. And then we get a wave 4, and then we get a wave 5 even further down, then we get a wave B, and then we get a wave C, which would point towards that this corrective pattern, we're looking at a weekly chart, would drag out at least into close to 26 or 26 itself as basically an A, B, and then C, maybe down to 78.6% again, yeah, which would turn the whole thing into a diagonal. And if it's a third wave, that only could be the case if it's the first wave of wave 3. So shouldn't be, in terms of wave sizes, shouldn't be what we expect. So personally, I would consider entering a set around the 50% retracement level because we have a few things that point to that. But we have to consider that parts of our usual, in quotes, guidelines or patterns would suggest that we potentially move further. Luckily enough, the 261.8 extension level for if this were to be wave 1, wave 2, wave 3, wave 4, wave 5 is in the similar area. On one hand, that's lucky because it means that if we enter in that area and we are wrong and the correction doesn't finish here, we should still shortly afterwards get at least a wave 4 that recovers a little bit and brings us into profit and allows us to already set our stop loss at plus minus 0 or a small profit, so that if it turns out that we are wrong and we retrace again further down, that we get out of the position still with a small profit. I mean, it's also possible that if there's a third wave down, that it also shoots through the 2618, but it's the most likely. And again, wave 4 of the previous impulse wave is in that area. The 50% is retracement is in that area. And if we just spike through and then recover, we still fit the requirement that we touch the top of the base channel. So we would have to dig closer or look closer. So for example, a daily chart, and try to label this mess here. Yeah. So, and specifically, so while on one hand, we could theoretically assume, okay, what if this is Yeah, we're gonna have a hard time labeling this as 5 waves visually. I mean, 1, 2, 3, 4, and 5 possible, but I'm not super happy with it. So, and it would need to be a diagonal in that case. So I need then tools, Elliott wave, and that would need to be then a leading diagonal. So like this. And I would personally say that would need to be wave 1, wave 2, wave 3, wave 4, and wave 5. So it is possible that we have a 5-wave move here. And here we would need to have then, yeah, that wave, labeling wave 3 would be tricky with that big recovery. So, yeah, so it's possible to see a 5-wave pattern, but it's not a clear 5-wave pattern. We also don't clearly see a 3-wave pattern in here, making this a little tricky to label. And to make things worse, it's also hard to label this here as basically 1, 2, 3, 4. I mean, could be. If that would be the case, let's check if we throw another expansion on the chart. So then this would be 0.4 in our assumption, and that's what it right now is. So, and here we would have our wave 2 point, and then if we say we, that should add the right, no, where's then the, right, C retracement, oh, so I modified the wrong one, not this one, but wave 5. No, that's the, well, let's just manually edit, no, wait. Yeah, so you can use that, yeah. Okay, so theoretically, if that is 1, 2, 3, 4, and wave 5, and again, I'm not saying that it is because this is really not a very visually clear pattern, then we would also get a maximum target in quotes that would overlap with the 261.8 retracement plus minus 5 cents, as we can see. So if we zoom out again, so the looking closer doesn't really provide us with more answers or many more answers. So if we zoom out again and reset the zoom or the scaling, yeah, so it stays the same. So basically, entries right now would not be such a bad idea. Theoretically, one could put the stop loss at 986, which leaves us with around 40% risk. Oh, no, not 40. What's that? So 30% risk roughly. And for the target area, if we are right, so we would get a huge upside. So let's assume we reach the 50% retracement here. That doesn't check very well because we don't overlap with the target areas for the bigger wave 3. But even if, unless we here are going to then exceed our target areas, as we do sometimes, so wave 5 target, nope, not wave 5 target, or is it already? No. So that way we have an overlap, yeah. So, but again, have to reset the scaling. So yeah, so entries right now are already possible. If we break the 261.8 retracement level, one could already consider about casting their losses. Technically, from an Elliott wave perspective, if this is indeed wave 1, wave 2, and wave 3, then the real stop loss would actually need to be at the low here at 610, which is more than 50% risk. If we break 610, then the entire pattern becomes invalid. However, we have a few guidelines, rules, and stuff that would support the idea that from here we actually have, so 50% retracement will mark the point of turnaround, or maybe even right now already will mark the point of turnaround. But we don't have a very visually clear corrective pattern here to fill us with extra confidence. Yeah. So if somebody really wants to invest, then as I said, it's not the worst time in my opinion. Without knowing anything about the current company news, numbers, or anything like that, just based on applying Elliott Wave Theory to the chart and in combination with Kennedy channeling technique that points towards this would be a prime turnaround area. And as I said, from an Elliott wave perspective, that stop loss should actually be down here. However, one could argue that visually wave patterns should, in quotes, fit, which means that if this is wave 1 and 2 of the bigger degree, then this would need to be the entire wave 3 in progress. So this cannot just be wave 1 of the third wave, because otherwise wave 3 would be proportionally way too big in relation to this wave 1, which means this cannot turn into a diagonal, which means the stop loss could be at the top that we had here. Yeah? But still, that's still 30% risk roughly. So there are other stocks out there that have way clearer and nicer patterns right now. So like if somebody wants to, as I said, right now, I think, again, my opinion, don't bet your house on it, but right now I think it could make sense to start to jump in and ideally increase the position on the 50% retracement or slightly below that. But I would not, personally, I would not do that right now, because if we would have spare capital right now, there are other stocks that have clearer patterns, lower risk, better risk reward ratios. Yeah. So moving on, Barnes & Noble Education Inc., our usual suspect, keeps moving up. I think we covered it a little bit more in yesterday's episode. There's not much to say. We called the bottom quite well, and we expect 5 waves up, although labeling this is a little bit messy, and so there's no clear opinion on my side yet what this or how that pattern here subdivides. We will need to break the high that we had at 1378 to be sure about this, because until that happens, this could still be ABC, followed by A, B, and C. That takes us lower, but then that should only be a temporary low before we then go further up. So it doesn't matter for our relatively small position. But yeah, entering right now, I mean, obviously, entering today is potentially better than not at all, considering that our outlook is bullish, but the risk-reward ratio is a little bit tricky, because theoretically the stop loss would need to be down here at 605. Or if one wants to bet that the correction finished here, like I assume it has, then at the low that we had here at 831, which again still is quite a little bit of risk. However, the upside is also there. So yeah, do with that what you will. We are moving on. Grab weekly chart, not much changed. We're still waiting. Immersion, nothing changed. We are still, we actually broke the level that we were waiting for, which means we have additional confirmation that most likely our corrective pattern indeed finished here, which means we will have to soonish worry about target areas, but our position is still at a loss because we entered a little bit too early, mislabeling this corrective pattern. We will relabel that probably next week to work out the details, but from the looks of it, we should have more upside here, so we also should have time to deal with that. And costs, no surprises, still no change. We're waiting for a break here, a break here. NEO, there are some surprises. So if we fall below 428, then something with my labeling might be wrong. I actually thought that the top would potentially be here, but I pointed out that we only have a visual 3-wave move and might get a potential 5th move that we had here. And everything points toward this being the bottom of the retracement. So we should go up from here, but if we break the 428, we will have to start to worry. But our position here with 100 shares is also not that big. We would get out if we break the 368. So 368 would be stop loss, because then our complete pattern becomes invalid. Until that happens, I can kind of live with if I mislabeled parts of the correction, but I obviously would love to be always 100% right, which, nobody ever is. So anyway, so we'll have to see how this develops till next week if we break the 428, which I consider unlikely. If you want to gamble on that, it would be probably a good entry point. Enter now, and you have less than 10% risk, so 5% risk to 428. So either the pattern holds and we get a 1, 2, 3, 4, 5, and you walk away with a 50% or more profit, or so the risk reward ratio here is definitely not too bad to either make it quotes a gamble, really betting on the correction finished here based on all the points that we have that point towards that or support that. Or, if you enter following Elliott Wave Theory, you would need to have your stop loss at 368, which is around 20% risk. With still good risk-reward ratio, better than Frontline. Novavax, I said we expect strong upward movement. The next couple of weeks will be telling. However, we would only consider increasing our position if we break the level here at 1074. I think it's 1074, And moving on to the crypto area, Bitcoin. As said, we expect more upside. That potentially is 1, 2, 3, could be 3, 4, 5, and we get a correction here, maybe down to 98 roughly, ballparked or guesstimated. before we go further up, or the entire, or this is only 1, 2, 3, 4, and we already go up from here. Our target is around 120,000 for wave 3, and that's where we have our take profit. XYO, we expect further downturn, and it looks like we're getting it. So we reached now our minimum target for the downturn, but I actually would not be surprised if we touch the 38.2 or the 50% retracement level here. Then we might consider, depending on how Bitcoin is doing, to close our Bitcoin position, or at least partially close it early and jump in here, because here the percentage gain that's possible is much better. However, the risk is also much higher. XRP, as said, should potentially trade sideways to break out of this channel. Since we bounced nicely on the 261.8 or 361.8 extension level, storage should go further up. We're on a weekly chart, so time will tell. Our take profit is here at 80 cents per coin. HNT should go further up. Ethereum, we don't care right now. The rest, Algorand, we still care. Potentially could have finished a minor correction, in which case next target would be 76 cents, in my opinion, to mark the end of wave 3, and then we would start from here our retracement to half that in over I don't know how many weeks or months, yeah. And I think with that we're actually going to leave it, because we don't have enough, we don't have enough labeled on other tickers right now, and I don't have the time today to dive into labeling it. And since we don't have positions in the other tickers, and we don't have spare cash to jump into other positions, so as we can see, we have a slightly negative cash balance with $20 right now, and that might be until January, once either we get the shares called away by getting whoever bought the call options from us exercises them, which would free up our cash, or GameStop by January 17th. GameStop by January 17th is above 30 and we get them automatically called away, or we are right, we get potentially just one more move up or not at all and get our wave C move down, which obviously will drag out a little bit, and then we get the next upwards development, and ideally before our options expire, or when our options expire, still are below 30. Or we are able, if we go down here and then by the mid of December around Christmas, we might be able to realize a big portion of the $2,800 premium that we pocketed here, so that we only have to give a little bit back to close out that trade, and then don't have to worry about if we will be in the money or out of the money by January 17th. But once the upwards movement starts, we can then actually, at in quotes, estimated top, sell new covered calls at a higher strike price to pocket again, ideally $2,000-$3,000 in premium, while still trying to obviously hold on to the shares to maximize our overall profit. Either way, so I think that's it for today. There are no questions in the chat, so we're gonna actually really leave it at this. It's gonna be interesting to see on which of my forecasts I'm gonna be proven wrong, which of them I'm gonna be proven right. I think my in Germany would say Trefferquote, so like the percentage of times I'm correct, has been quite good so far. My returns on the portfolio kind of show that either I just get lucky a lot, or I know what I'm doing mostly, yeah, or to some extent, or it's a mix of both. Either way, but I cannot complain. I truly hope that you're all able to take something away from those streams, even if you disagree with some of my forecasts or so. I hope you should never just only act based on what I'm sharing. As I said, do your own research, make your own decisions. Yeah, I'm really just sharing what I'm doing, why I'm doing it. Doesn't mean that it's right. Yeah, I also have losing trades, as we see with Novavax, for example. So yeah, but anyway, that's it for today. Thank you all for stopping by and tuning in. Don't forget, like, subscribe, enable notifications. I wish you all a pleasant weekend ahead, and then we see each other hopefully on Monday for another episode of Daily Market Mastery. Till then, bye-bye.